Good afternoon. The AmplifyMe simulation provides a realistic and hands on experience that is designed to allow theoretical financial knowledge to be applied in practical market scenarios with the goal of preparing participants for professional roles in the finance industry. The simulation aims to develop analytical skills, professional competencies, and strategic decision making through role playing two different but complementary roles within the financial sector. The first role was hedge fund managers who have the ability to pursue absolute returns strategies compared to mutual funds and have the goal of achieving higher cumulative returns compared to the cumulative returns of the stock and bond markets as seen in figure 1.1. With flexibility to choose from a wide range of investment techniques and assets, including long and short positions in stocks, bonds, and commodities. The other position was sales traders and market makers or investment bankers who arrange trades for their clients by utilizing active risk and transaction management, helping their clients find traders willing to trade and profiting by charging commission and trading out of position for profit by selling or buying. These two roles typically work in unison with the financial markets and help each other reach their financial goals. The simulation consisted of role-playing hedge fund managers and investment bankers. The hedge fund manager would make made decisions based on news headlines with $20 million in available cash to buy or sell or short stocks, which included blue chip companies like Microsoft and Tesla and commodities like gold. The goal was to finish the simulation with its highest possible positive profit and loss position. The task for the hedge fund manager was to trade at large volumes, which would lead to liquidity issues where the exchange prices drastically spread from the market price due to there not being enough sellers willing to sell at the midpoint price or lower prices. For example, as seen in figure 1.2, when the volume was smaller, the bid and ask prices total spread from the market price was relatively small, but when the volume increased significantly, as seen in figure 1.3, the spread increased significantly, which could lead to significant losses in profit. Hedge fund managers worked with the investment bankers to attain prices close to the market price. These activities closely mirrored the actual responsibilities of financial professionals by undertaking risk management strategies, asset allocation, liquidity provision, and real-time trade execution between the roles. The investment banker's key goal was to manage their market risk and analyze the exchange price of a requested volume of shares from a hedge fund manager and issue a quote price that was much better than the exchange price for the hedge fund managers to buy from, with investment bankers receiving commission for their service and selling or buying stocks from the hedge funds. Investment bankers would then need to trade out, such as buying back at lower prices to get out of a short position to attain profit. A key task was to ensure prices weren't too close to the market to make the position hard to get out of, while not too far as for the price to be unattractive. A key feature of an investment banker is the customer service, as they must maintain excellent relationship with their hedge fund managers and be timely with the quotes and offer prices that both parties are essentially willing to accept. Now, looking at skills, throughout the simulation, my analytical skills were significantly sharpened by continuously interpreting the live market data and used to inform my decision making. By using line graphs that reflected live market prices, it became significantly easier to analyze the market data and identify trends based on the live market data, such as new technology developments for high growth blue chip companies, leading to significantly increased market prices over the duration of the simulation. Seen in figure 1.4, where the announcement of Microsoft's quarterly 2 earnings exceeded expectations and led to growth, with subsequent announcements from other companies following the same trend and graphs. These elements combine to help make data-driven and informed decisions for buying or selling. Now, the simulation presented realistic challenges such as rapid market shifts or unexpected losses, requiring quick and decisive strategic solutions to succeed in the objectives. I deployed a scenario analysis strategy by making an Excel spreadsheet to create a different scenario based on multiple potential outcomes of my portfolio's performance throughout the simulation, which is effective in dealing with uncertainties due to ambiguous trends in the market, and was highly effective in enabling me to make agile and data-driven decisions and mitigate risk to a significant extent. Essential professional skills such as clear communication, time management, and adaptability were vital throughout the simulation and achieving the objectives. Investment bankers' communication was significant to achieving accepted quotes from hedge fund managers and receiving commission due to the large amount of competitors in the market, making relationships and customer service vital in achieving the objectives. Managing tight trading and opportunity window required effective time allocation and prioritization to ensure trades were made optimally and ensure opportunities weren't missed. And adaptability was critical in rapidly changing market scenarios, requiring decisive strategies and decisions to ensure the portfolio's returns were maximized and risk and losses minimized. Participating in the simulation provides valuable insights into my personal strengths and weaknesses. My strength included a robust analytical approach to identifying the opportunities and maximizing portfolio returns, as well as effective decision making under pressure, such as holding instead of selling during times of volatility. However, improvements were needed in maintaining optimal communication and clarity under stressful conditions, as seen in Figure 1.5, where many hedge fund managers were requesting quotes during a high growth period, and I was unable to clearly communicate with them all, leading to losses in quotes and overall commission for the investment banker. It is evident that humans exhibit certain behavioral idiosyncrasies from time to time, so it is vital to ensure that markets are thoroughly analyzed to find trends and that they are communicated effectively, which is seen in real world scenarios where trades need to be constantly up to date. So to conclude, in summary, the AmplifyMe market pathway simulation offered a comprehensive and practical learning experience with a goal to significantly enhance analytical skills, strategic problem solving, and insight into real-world scenarios that finance professionals engage with daily. Reflecting on my personal strengths and weaknesses provides a pathway to professional growth, and moving forward, I will continuously develop these skills through further practical simulations, networking with professionals in the field, and complete alternate skill enhancement programs to ensure my preparedness and excellence in my future financial career endeavors.